In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anybody else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes or Apple Podcast, type in Old Dogs, spelled D-A-W-G-S, find our podcast and subscribe. We got a great show for you today. I'm real stoked about it. We have a gentleman here who specializes in distressed commercial real estate. And I'm talking about Jake Harris. He's a best-selling author on the area of distressed commercial real estate, bringing 18 plus years of experience in real estate, construction, and investment management, and has been a featured national speaker in the real estate world. Over the past 6 years, he has managed, developed, and acquired $200 million plus in projects and over $200 million in the development pipeline. Jake loves to build relationships and communities, and above all, he is a family man, the father of 2 adventurous boys and a newborn daughter with his wife. Well, Jake, welcome to the Old Dogs REI Network.
Thank you, Bill. I appreciate it. And that bio sounds fantastic. It's almost like I wrote it myself.
Well, Jake, man, I'm excited to talk to you. I think this sounds like a great area, and we've been all over the board. But finding distressed commercial. Now, is it a residential side or is it all over the board commercially?
It's maybe a little bit like you, been a full gambit. It's been residential, it's been commercial, it's been notes, it's been a whole different area of investing now, getting close to 20 years that I've been doing this. Started in residential, and then as I kind of took baby steps and evolved, it layered into either doing more, which I did. We did an opportunistic kind of flip fund where we did 1,200 flips in 23 states. We aggregated some single family rental portfolios kind of at the larger scale, but then it's kind of frustrating to do that as far as, going a mile wide. We wanted to go a little bit more in depth. And so we started focusing in on some markets, and that's where commercial has been layered in the last 7, 8 years of that experience.
Great. Well, how did you get involved in real estate in general? Did you start off your career in real estate?
Well, yeah, that's it's interesting. I would say not necessarily. I was actually in the Army.
Oh, really?
I didn't know. Finishing up, a career, and I was air assault infantry, and I didn't really know what I wanted to be when I grew up. And somebody threw me this book, this purple and gold book, and said, "Hey, Sarge, read this." And so I opened it up, and it was like, you laughing. I think you probably know it's a Dad Toward it.
Yep.
It was just like, wow. And what it really did is it crystallized, and, call it that light bulb or aha type of moment when it was like, this is what I want to do. And then I actually think back and retrospectively throughout my life is when I was a kid, initially 7, 8 years old, my family lived in a 16-foot camp trailer on an old farmhouse site. And we bought an old farmhouse that was built in 1888.
Wow.
And it used to be part of this, massive orchard, 1,000-acre kind of orchard. And over time it'd been pieced off. And, but my parents bought this fixer-upper. And I mean, it was a real fixer-upper, kind of a railroad town in California, head of this orchard. Didn't sit on a foundation, like it was just sitting on rocks, because that's what they did back in the 1800s, is they just took rocks and then built on top of those. So as a little kid, I grew up experiencing that. I would work on a construction, hang out. Like that was my backyard, what I played in. Some people have sandboxes. I had a really old house that we were fixing up for many, many years as they did it themselves. And so that was kind of really the starting. And like you said, when was that first origin story? It probably, and retrospectively, looks back to that moment, but it wasn't until that Rich Dad Poor Dad was that aha, this is what I want to do. And then it even took me a few years subsequently from reading that book to getting into real estate investing, call it as a professional.
Wow. And what part of California are you from originally?
Northern California. So just outside of Sacramento.
Oh, okay.
Just heading up to the foothills. So Newcastle, Loomis, Auburn, where I grew up most of my life. And then, obviously, like I said, I went off to the Army, spent some time down in the South in Georgia, Louisiana, South Carolina, and then in Phoenix, and then bounced back and forth between Texas and California now.
Oh, very cool. Well, obviously, you have come a long way since you first got the Purple and Gold book. So tell me a little bit about how did you start investing when you were still in the Army?
No. So, I was 23. I was out of the Army. I was bartending at a golf course. The reason I took a job at a golf course is because I didn't know what to do. I wanted to be around some other rich people, but I didn't have the wherewithal, the financial to join the country club. So I figured I'd just work there. And I was asking people that were real estate investors and developers and contractors and said, hey, I'm 23. I'm ready to go grab that tiger by its tail. And the advice I got at 23 was actually to get into construction. That was not actually the answer I was looking for. But the developer that I that gave me this advice said, it doesn't matter what you do in real estate, there's a contractor involved. Mm-hmm. If you're building a subdivision, moving dirt, if you're fixing up your kitchen, you're building a high rise, every facet of real estate has a contractor involved. And he said, what's is interesting is you're a little bit competing with for the same dollars with the contractor, because there's a certain price of what you pay for it, what you're going to be able to fix it up or build it or do whatever to, and then what you're going to sell it for. And so you're competing, but also partnering with this contractor. And so he said, the people that have learned how to do, the construction or the investing via college, take a little bit longer to catch up to the guys that come from the trades. So at 23, he told me to get into construction. And so that's what I did. I went and got into commercial construction when I was 23 and kind of talked my way into a job that I didn't know how to do. Part of that being very, very persistent. I just kind of pestered the guy that owned the commercial construction company at the golf course and just, really what I think landed me the job was I told him I'd work for free. I was confident that I could do it. I can figure it out. I'll go in there and it's for an estimating position. I can do that. I can figure it out. And this is pre Google, like before, like you could actually like figure out how to do everything. You know, somebody else already done a video of it. And so I got a job working as an estimator, and I had no idea what I was doing. I got in there and
It's
like,
wild.
hey, can you go do some takeoffs for this TI? And I was like, so what? What do you just say? And so the TI is a tenant improvement. So somebody was going to fix up this space and they wanted me to do takeoffs. And I didn't know what those were. And I was kind of like, again, this is pre-Google. So I was like, I don't know any of those words you just said. So I went over to one of these other people and I was like, hey, they want me to do some takeoffs. Can you give me one that you did on another project? You know, I was like, just trying to get anything. Like I am like deer in headlights, eyes this big. I don't know what the hell I just talked myself into. And they gave me takeoffs. And then it was like, oh, we're doing math. We're just calculating up geometry of what's the square footage of the carpet and how many linear feet of baseboard and how much paint and other things. I was like, oh, I'm really good at this. This is awesome. I can do this. And so after a short time period, I was able to quickly get immersed, jumping into the deep end, estimated a lot of projects, got a lot, became a superintendent, kind of a project manager, and did in the Bay Area, East Bay, for Equity Office Properties was our kind of main client, which was Sam Zell.
Mm-hmm.
People that know Sam Zell, he's known as the grave dancer. So he typically would buy assets that nobody else wanted, somewhat being distressed. And then the reason I'm saying this is because I didn't know who Sam Zell was when I was 23, 24 years old. It was not until years later. And I say that because I look back in hindsight, like so many people seeing this 2020 kind of vision of my early time fixing up this house, then getting construction, working within or for the Equity Office Property, fixing up office buildings. And now what's led to me buying commercial distressed real estate but it was those experiences in life that then I think prepared me for what I'm doing today.
Fascinating. When you said you started in construction, I pictured you putting on a hard hat and, getting in there and, learning some framing or whatever it may have been, but you kind of skipped all that, it sounds like.
Yeah, I just went the administrative side of it, and I had to learn the trades from watching people do it. And then I moved to Phoenix. I bought my first property in the early 2000s down in Phoenix. And, I took a job working for a kitchen and bath remodeler. And so I would do kind of high-end kitchen and bath remodels, putting in cabinets, doing granite countertops, tiling backsplashes. And then, in the evenings, I would flip some houses. I'd fix them up, with either the spare parts, the extra things that were left over, or just my sweat equity. And, then took that skill set of actually putting the hands on. So I did kind of circle it back around. And then there was a realization. I think I'd made $75,000 flipping a house. What I did is I remodel it. I painted the kitchen and put some French doors on the den. And so instead of being a 4-bedroom, it was a 5-bedroom. So then I just relisted it on the market and made $75,000, in a week. And it was kind of like, again, another one of those light bulb aha moments. Like, why am I carrying these granite slabs?
Really?
I was like, I just made $75,000, and that's more than I probably would make in a year's wages doing construction. I was like, I need to stop doing this, and this just really focus on doing investing. And more or less until the subprime meltdown of 07, 08, and the small little stint of getting back and doing some construction in 08, 09, all I've done for the last, call it 20 years, has been an investor. and just invested. And that's how I pay my bills and, get up every day is look at deals and invest in deals. I am a broker in California. I actually did go back to school and went to grad school, got a degree in international real estate and finance. And so part of it was in retrospect to getting my teeth kicked in the subprime meltdown. I'd become a millionaire before 30. I had a goal was to be a millionaire before 30, and I bought these houses and I fixed them up, and then I started renting them, and I had several houses. The problem was I kind of stopped. I hit my goal and then just kind of got around and fat and lazy and stopped. I didn't move the goal. I didn't, say what's next. And I felt like I'd achieved it. And the reality is the market was doing tremendous things in Phoenix, going up 10, 20% a month, just ridiculous amounts of money. Being young and naive, I couldn't see that. I remember sitting on a street corner down in Tucson, just down from the university. I was working on this little adobe house and crying because everything was melting down. I had been selling each one of the houses I had, coming out of pocket to close it. So maybe I owed $300,000 on the house, but I was selling it for $275,000. And so I'd go to closing and cut them a check for $25,000. Then the next house, call it, if it was the same thing, I owed $250,000, but this time I sold it for $200,000. And so I came to closing table with $50,000. And I thought, I'm just going to keep doing this and I'll sell off all the houses and then, keep going. Well, the reality is I ran out of money before I ran out of houses. And that's when I was sitting on that street corner. And then, I tell that story in the book and how that was kind of this pivotal point in my life of being kind of introspective and looking back at what I really wanted to do. Maybe not quite at that time. I was just saying, dear Lord, can I be worth no money? Can I start over and be worth nothing? That would be awesome. And then that, like I said, stimulated the next iteration of going back to school and going, I'm going to do this forever. This is what I'm going to do.
Awesome. That's awesome. And well, you obviously have found a niche, and it sounds like, you've cut your teeth on a lot of different things early on. How did you kind of zero in on commercial real estate?
There is the deal size. You can make a 10% return on call it a $250,000 house. And that 10% return is $25,000. You can make, and it's the reality is the same amount of effort to do that on call it a $250 or $2.5 million, or call it $5 million property. Same amount of work that you're going to put in on a $250,000 house. It's the same system. It's the same steps. It's the same process that you're going to do when it's a commercial property. But when it's a $5 million property and you make that 10% profit, that's $500,000. So to do the equal amount of $250,000 houses, you have to go do 20 of those to equal the one $5 million deal. And so to me, it was just kind of this natural progression. And to be honest, it was a limiting belief that I could do bigger deals when I was first starting out. I wish I would have got started sooner, earlier, but the commercial deals, and I like that between $2 and $25 million kind of deal size. Maybe with inflation, it's 3 to 30 right now, but there's less competition. You're not going against a lot of the institutional or private equity funds, but you're above the mom and pop investors. And so it's limited competition, but the profit margins and the efforts are rewarded in a greater percentage than it is, say, residential $500,000 houses.
And what type of commercial properties were you investing in?
Well, I've really done, again, this is over a 20-year career, and in last, 10 years, I've done quite a few different. We're building a hotel on the Riverwalk in San Antonio. We've converted some warehouses to apartments. We've built some single family or some communities, so subdivisions. We've built some apartments, done some land assemblage, industrial land, have a couple of office buildings. And so it kind of runs the gamut and just call it that core competency. And really what I'm, more investing in is on markets. And so when I say that as markets, is I use a lot of data, demographics, and analysis to determine something's happening in a particular market. And so right now, California is doing an amazing job. Really, the West Coast is doing an amazing job of driving people out of California and the West Coast. And the beneficiaries of that are Boise, Salt Lake, and Texas as a whole. And then from that, we also determine is like, where are there some great opportunities in some of those markets where it's not priced in to the real estate yet. And then when we look at some of those markets utilizing infrastructure, bond spending, and other dollars, is the future is going to be brighter or has not been priced into the real estate. And then what we're looking at is good deals in that particular market. And so that's why we've kind of covered a bigger gamut of asset types, is because we like that market. Now we're just looking for a good deal. If it's an industrial building, if it's multifamily, if it's office, if it's, land, as long as it's in that market or in what we believe is the wave or the current is pushing in that direction, we think we're going to do better. And then as far as from the distressed element, is the reason why I tell people to invest into distressed is you can oftentimes get a greater discount to the market value, and allows especially beginner investors to be able to make more mistakes and still make a profit. Maybe it's a little bit more difficult right now, given, the federal government just printed $20 trillion and every asset price is being inflated. It's a little bit more competitive, but there is still deals to be found out there.
You talked about some of these properties that you're converting, from warehouse to apartments and so forth. Post-COVID, the commercial industry got hit pretty hard in some areas, and I'm sure you know it better than I do. But did you experience a fair amount of that in terms of, office buildings right now, especially in places like, downtown New York and even San Francisco and other areas? Has that been part of your strategy? And, you mentioned a little bit sort of this repurposing of commercial property. Is that something you're actively pursuing?
Yeah. I did not model any pandemics into any of our underwriting thesis or investment criteria. So I missed that one on some of our investments. But like you said, there were some challenges in the commercial space. We lost some retail tenants. We lost some restaurateurs. I have a Buffalo Wild Wings on a corporate guaranteed lease, but their lease came due and they just were like, yeah, we're not signing a new lease because we're not sure what's going to happen. We were able to kick the can down the road and get them just extended for a year lease and then another year lease. And hopefully that the future looks a little bit brighter. But the reality is that some of the markets we invested into, and specifically like San Antonio is one of the markets that I believe is still underpriced, but is going to see more and more capital flooding into it. We were able to buy some assets at under replacement value, like buying an office building at $70 a square foot. And then I was spending $30 a square foot on a TI to build it and fix it up. Our all-in numbers are at $100 a foot. So we had a competitive advantage over everyone else in the market that had maybe just transacted at $200 or $250 or $300 a square foot. they didn't have a whole lot of wiggle room in their price like we had. And so we were able to kind of keep up on some occupancy levels. But then you mentioned like repurposing. We took an office building and we're actually just delivering probably about another 4 months from now, an office building that we converted to apartments. So we're doing 63 apartments on the Riverwalk in San Antonio, because the office world is still a little bit unknown. So many people working from home, but there's been multifamily has been a darling. It has done tremendously well. Rents have skyrocketed, and so we're gonna lean into that. And obviously the cap rates that multifamily's at very much help benefit that additional cost of adaptively reusing that building.
Yeah, that's a bold one. Definitely taking, office building, converting it to, multifamily, because, the plumbing and all that, I would imagine be a little bit more sophisticated, and you'd need a lot more of it than you would, just your restroom, per floor or something. That's amazing. That's really interesting.
Well, and it's a historic building, a 10-story historic building built in the 1920s. It's on the National Historic Registry. We also did an opportunity zone for that, and then layered in some PACE financing. And so getting, different layers of structured financing of the deal has added some complexity, but it also makes it worthwhile. So getting federal tax credits, utilizing state tax credits, using PACE. PACE is property assessed clean energy. So a finance that allows for, like you said, upgrading the plumbing, electrical, HVAC, windows, and a combination of it. And then layering that into an opportunity zone. It's a costly, a big undertaking, but I think you're also rewarded when you do something, you do it right.
Right. And, sort of conversely there in the industrial space, that's been very hot, I understand, especially with the direction retail has taken, that some people just can't find enough warehouse space in certain parts of the country.
I wish I would have done more of that. Like you said, it's hard to find anything that makes sense. We don't have much, or if anything, of that other than a couple of pieces of land that was industrial. We rezoned to high density mixed use. So that and multifamily were kind of darlings of this pandemic.
Well, it's great. It sounds like you're keeping active. That's for sure. Now you're technically a commercial broker now, or did you start off as sort of a residential type broker?
I do have my broker's license. It covers both commercial and residential, but primarily it's just been for a lot of our own deals. And actually, to be honest with you, I probably bring in outside brokers more than I ever represent myself. So it was just one of those things. I thought I needed it when I was younger, thinking I needed to get my broker's license. Then I'd be smart enough or educated enough to get into some of these deals. The reality is I started getting into deals before I finished all my broker's testing and criteria. By the time I did finish it, I was like, I don't know that I actually need this. So I don't do a whole lot of like normal brokerage. I have it. I've used it for our capital markets team as the broker of record, but utilize, typically having people working underneath of me.
Gotcha.
Yeah.
Well, it sounds like a great career, and even in that 20-year span to be able to move to these huge projects like that. What would you say was one of the biggest mistakes that you made that you really learned from, though, in that process?
Well, I mean, obviously, over leveraging early on, being in young, and when they're giving you a loan for like 105% of your purchase price, you should probably be cautious of that.
Yeah.
That was just like, I'm so smart. Look at this. Like, oh my God, look at it. Oh, nothing could go wrong with it. It's amazing. So, obviously the early over leveraging, when the market turns, flattens out, stutters, you're in trouble. unless you're having cash flow property. I would say subsequent failures were all learning experiences. Realizing that you don't have to do this alone. Real estate's a team sport. Get people that know what they're doing in all of their different lanes. And so you may be in where I have some experience in the construction realm of it, and I can maybe help steer the team in some directions on the construction. I still use a lot of other people when we're doing deals, real estate attorneys, both on the financing side as well as, the structure, entitlement, reviewing contracts, contractors, architects, engineers, inspectors, the whole gamut. And I think what happens is limiting belief is that I felt like I needed to know it all. I need to have my broker's license. I need to go get my master's degree. I need to get to these other levels, and then I'll be able to invest. But the reality is that those are all limiting beliefs. That limiting belief that you can do it or can't do it, like whatever you say is truth. And I give you one little story is that I have a desire to build a skyscraper, build a high rise. And I was talking about this. I was down in Miami, and there was this kid. I call him a kid. He was probably his late 20s, maybe early 30s. And he just finished I don't know what it was, a 45-story condo project in Miami, and was at this thing talking to him and said, "Hey, what'd you do?" And he's like, and he had just come to the country like 4 years ago, 5 years ago, with no money, no credit, no experience. And he went out and he bought a piece of land for what it was listed for. And he hired the contractor and the architect that did the other project down the street and just had them build it. And whatever the price was, that was what the price was. He even went and raised money from just walking around and talking to people. Hey, I'm going to build this condo project and I'm going to sell them. And he pre-sold the condos and was able to build it out. And the very first real estate project that he ever did in his life, coming fresh to the country with no money, no credit, no experience, anything like that, was a 40-story condo project and made like $25 million profit at 28 years old. And I was so like, it was an out of body experience because I was just like questioning everything of my own reality and life, that I was just like, what, this guy, like, but look at all the experience I have. And then I was just like, and so what it was is I was actually going through questioning my own limitations. And it was like, how many of these things exist in my life that are all my own self limitations? And so that's why I bring this up as far as for the biggest learning of lessons of failures was all of your limitations are your self limitations. Whether you think you can do it or you can't do it, you're right.
Yeah, I totally agree with you. It's so interesting if you have relatives, like my father-in-law was from Cuba and came over and built up this huge real estate dynasty, and it was because he was in America. He didn't know. He didn't know any better, and he hadn't been around people enough to discourage him from doing this. Basically, this is what I'm going to do, and I think that happens more often than not. I mean, I've interviewed guys on this show, kids from Russia, that came over and they went into the military, ended up getting their education paid for by the military, got out. Got into real estate or computer programming or whatever it was that brought them into the real estate sphere. And they just been gangbusters in just a short period of time because, they came over here saying, this is the land of opportunity. I can do anything here. And so they had that mindset coming into it. And I think that really does make a world of difference.
Yeah. So many immigrants, exactly what you said, that just, I have a friend from Peru, and that's what he said. He says his dad told him this is the land of opportunity, but you have to work for it.
Yeah, and they're not afraid of a little work at all. In fact, it seems like it's a lot less work than than they experienced in their countries, and they come here, and they, boy, the return is a heck of a lot better all the way across the board. Well, what about sort of the other side? What is, you say, maybe one of your biggest successes, something that you did that just really worked well?
I think my team, beats me up on this, is that I don't celebrate some of these things as much, because it's just kind of like, all right, on to the next. But there is some satisfaction of seeing things turned around, built. I always say whatever I'm working on right now is the most exciting and successful project that I've had. And I think even to like some of the audience people that you're listening to, is getting to a place to where I was financially free. I make enough passive income that more than covers my monthly expenses, and I don't have to work if I don't want to. But I'm actually in taking back to when I had became a millionaire before 30, and then I just sat around and it got up at 11 o'clock, and and I was just fat and lazy. I don't do well with not working. And really, I think that I need to be doing and have some kind of creative outlet. And this creative outlet is now this real estate. And so that level of success of then being able to walk around and show my kids these job sites means so much more to me than any one individual project, or, gee, I made $1 million here, or, flip this building, or X, Y, and Z. It's the ability to control my own path, have and do, and not to say that everything I do in my life is without stress or without worries. There's still problems that exist within my businesses, and it's not all sunshine and rainbows. But for the vast majority of my day is I love what I do. And so that is, I believe, the greatest success that anyone can have.
Great point. Well, our audience are folks that are 50 years of age plus, that some are approaching retirement, some are already in retirement, and they're looking at real estate investing as a means to either generate additional cash flow, or maybe it's to get a good return on that nest egg that they have, or maybe it's like you're saying, they worked the gambit. They left the company, and they're just kind of looking for stuff to do too, and to get their mind around. But in each case, I think there's definitely a monetary motivation there. But what kind of advice would you have for folks like you may say to somebody that's older that you may know, that how do you get involved and get started in real estate? You've been in a lot of different spaces, from flipping to you name it. What do you think would be the sort of the best avenue for folks in this category?
So I think about this in a little bit different direction, is try to figure out, or kind of my old business partner is a wealth manager. And I think maybe some of that was some initial premise of it. But I heard this advice from somebody who said, like, what is your dream life? Like, what would your dream life be? And then you can actually break down. And so your dream life, maybe you want a Ferrari, you want to fly private jets, you want to have a villa in Italy, whatever it is, like, throw it all out there, and then start actually reverse engineering your life. And so what happens is, like, many people would be like, well, you know what? I just want to be have the ability to take vacation, 2 months out of the year. And I want to do that in different locations. And maybe it's a house, and they want to rent a house, a villa in Italy, and that costs $25,000 for a month. And so you can actually then reverse engineer to say, here's what I need to make. I need to make $300,000 a year to live my dream life. What happens is most people don't actually take that time to break down is what is that they want to do. Now, from your initial kind of question about investing into real estate, it's like, well, when you have the understanding of what you're trying to achieve, the direction and where you want to go, then it's better to devise an investment strategy around that. Diversity is great when you're wanting to offset risk. But most people that have made wealth have done it in one narrow category. They did it all in, real estate, or maybe they're plastic manufacturer. They made their wealth in there, and then they kind of diversify it later. And so it sounds as like if some of your listeners are looking for opportunities to utilize real estate to create some additional wealth or income or some other facet of that, is now they know which angle. Triple net leases are fantastic for people that don't like risk and just want mailbox money coming in. Can you go find an industrial building in the Midwest that has a corporate triple net lease guarantee? Yes, you can do that. And that's very little effort on your part. And then you can use a lot of things like cost segregation and, depreciation bonuses that offset maybe some income or some other things that you're using with your retirement account. Maybe you're investing through your retirement account, and so then you're not even as concerned about that. And so you're willing to pay or have a lower risk, by doing a stabilized asset like a multifamily building. Now, for why tell people about investing into distressed real estate or commercial real estate is, again, it was because they have a wider margin of safety to kind of screw up and still be successful. Right now, I see retail as a little bit more distressed than others. We talked about that. Retail doesn't necessarily, it's so location driven, is you're selling your box of Cheerios and you have to make a margin. If you don't have the customer, in that location, it doesn't matter what the retail rent, it could be worthless. So now you have to start thinking of things more creatively. So I think first establishing what it is that you're trying to achieve with your investment strategy helps then determine the next levels of steps for you to determine what you're going to invest into. I've found that some people like mailbox money. Some people love doing glamorous, sexy projects, investing into things like luxury hotels. And again, it's now just depending on what blows their hair back.
Right. That's a great advice. I think, I think it really does depend on what you want and how involved you want to get as well. Looking at your own business, what excites you about your future and where are you going with your business?
I'm really excited about hospitality right now. I think hospitality is kind of merging over all of commercial real estate. We have more friends online on your Instagram and LinkedIn and Facebook pages than ever. But people are feeling more isolated and alone, depressed. And so what's happens is they are seeking community. They're seeking connections with other people. And I feel like hospitality does that really well at a high level. And I think as they get that into commercial, as in office buildings and coordinating, it used to be, Grandpappy's old office tower was just the tallest, shiniest building. And that's where everybody wanted to be. Well, now people want to be where there's the cool place to have food, in a coffee shop and shopping and everything else associated with that. And so you'll see in office buildings that's maybe a short, stocky building next to everything that's walkable. And so when I'm investing in like I said, the hotel I'm building on the Riverwalk in San Antonio, converting some of these other apartments to some hospitality space, investing into taking some tired motels and rebranding them is where I think I'm going to spend a fair amount of my time into the coming future, actually connect people with community and with others. And I feel like that is a human nature desire.
Great. Yeah, that's an interesting space. I mean, there's a lot of hotels were hit pretty hard in the hospitality realm. Do you see it coming back pretty strongly?
Revenues in some areas are up above 2019 numbers, which is kind of shocking.
Wow.
But that is not based on occupancy. It is because hospitality is such an amazing hedge for inflation. As rates go up, what was $100 a night, now it's $200 a night. You can have half the occupancy and still have your same revenue numbers. So that's where I see that things are recovering. And I also think that the rich are getting richer. More millionaires are happening every year, and people are looking for unique experiences. As maybe you've stayed at a lot of Marriott's or Hilton's or Hilton Gardens Inns, beige hotel rooms. If you have some option to, stay at a boutique hotel that's different, I think more people are looking for that. And so what I am seeing is that lifestyle or boutique kind of category of hospitality is recovering faster and seeing better long-term investment strategy versus the cheapest option out there. And then you're racing to the bottom, and there's a lot of people that can just play in that space, and the Super 8s and Motel 6s and Days Inn and others that then get lower, and then you're competing for a higher waged employee, and it's just a challenging space to be in. So I think it's going to bifurcate into the future. Those that can create that unique experience, give good food and beverage offerings, will do very, very well. Others may continue to struggle for long time periods.
Good information. Well, we have kind of zipped by on our time here, and we have a segment called Wrap It Up, where I ask you a series of quick questions on resources that have been of value to you, and it's a way for you to kind of share some of your good ideas and resources with our listening audience. So if you're ready, we can go ahead and wrap it up.
I am ready.
All right. Favorite real estate book?
So the favorite, well, besides my own, Catching Knives, that's my favorite one because I spent a lot of time on that one.
Yeah, we didn't get a chance to talk much about that, unfortunately.
Yeah, Catching Knives, a guide to investing in distressed commercial real estate. You can find that. We'll get later. But my favorite book that I've given out the most and probably bought the most is Powerhouse Principles by George Perez. George Perez, Cuban guy that came over and is now worth $6 billion, the condo king of Miami. And it is one of the most fantastic real estate books that I've ever read.
Oh, excellent. Excellent. How about just a favorite general business book?
I think, really I'm going to go with Atomic Habits by James Clear. It is more so a lifestyle and just everything. It's the simple, small things that are repeatedly done, and you don't rise to the level of your goals, you fall to the level of your systems. Where I lacked systems early on and it led to my ultimate demise, Atomic Habits is the manifestation of what I was lacking when I was younger.
That's great. I'm not familiar with that, but that's great. I got to check that book out. How about most valuable website for success that you tap into regularly?
For me, it's finding deals. So, I mean, it's, the CoStar, Crexy, LoopNet versions of trying to find more deals. Really there's a mastermind that I've been a part of for the last 5-6 years, GoBundance. While GoBundance.com is the website, I don't necessarily go to that website. It's that collective of being part of that group that really has given me next level of value collectively.
Yeah, I've heard. It's interesting. More and more people are telling me that's a place that they're very involved. That's interesting. That's great. How about an app on your phone? Anything that you use on a regular basis?
For me, it's actually Instagram. That's where I'm most active, and I kind of get to see a chance of be a little voyeuristic of see what's going on. And then by cataloging this and memorizing, or it's not say memorizing, but just seeing the way that maybe trends are going, following other hotel designers, other architects, developers. I can kind of see what's happening before it becomes a reality, or it's more like a live action stream of life. But also take that with a grain of salt. It's a filterized version that people are only putting out the best of what they want to show out to the world. So don't try to compare yourself to what other people are doing. Still just do your own thing. But for me, it's the most active place from an app.
Great. How about favorite quote?
I would be that quote that I just mentioned with James Clear, is that you don't rise to the level of your goals, you fall to the level of your systems. And that's James Clear from the Atomic Habits book.
Excellent. Final question. If you lost absolutely everything, all of your assets, and if you had to start over, knowing what you already know, and you only have $1,000 in cash, what would you do with that $1,000 to relaunch your real estate investing business?
I would probably use it to go reconnect with some of those people in that GoBundance or the mastermind group, that I know that there's other people that need talented people that can do work. And I would probably go figure out how to go work for one of these other people and use that $1,000 to live off of, utilize it and pouring it into myself. I'm going to bet on myself with all my last dollars, but that doesn't mean I have to do it all myself. I can then utilize some of their existing experience, network, or platforms and go work for them.
Excellent. Well, I'm sure there's a lot of folks listening that want to find out more about you, your companies, and the book. We will definitely have a link to your book there. What's the best way for folks to reach you and find out about what you're doing?
Catchknives.com is where you can sign up for a newsletter. You can get some other resources, like we give away some due diligence checklist, actually do a dream life calculator for people to calculate what their life would cost, or just sign up for some of the blogs and uploads of those. That's the most active. Jake.realestate. That's on the Instagram. And then you can search my name. There's a YouTube channel. And then my main company, harris-bay.com, is where we do a lot of our investing. And that's the boutique private equity real estate.
Awesome. And just a quick question here. Catching Knives. What's the the reason you chose that title?
Yeah. So, the financial advice is to not catch knives, is to wait for the knives to kind of fall, hit on the ground. And so that's in the equity stock market world is, avoid catching falling knives. And where that has some value in something like a Tesla stock, maybe it goes and, it's at 600 and it starts falling down. And so they don't invest and wait until it kind of flattens out and then starts going back up before you invest into it. That makes sense when you have just a couple of clicks that you need to do to go buy some more stock. You can go buy as much or as little Tesla stock as you want in a very quick, order and a few clicks of your mouse button. Real estate, and especially commercial real estate, has a lot of scarcity built into it. And oftentimes you'll find is that building in your town or that you're looking at that goes into distress may only go to sell once a generation. There's a lot of people that own a lot of this commercial real estate is they just never sell because everything is set up from the tax code and the cash flow and everything is to hold assets long-term and let the price kind of go up. So they don't oftentimes transact. And so when there is distress in the market, I actually say that as a contrarian is you should go out and buy those assets as long as you have an appropriate plan for doing that. Blackstone, when they had Invitation Homes and they're doing some other things, they were paying above market value on some assets. But this was back in 2011 and 12. they had a different premise in which they were looking at, and they thought by 2015 or 16 or 17, the value was going to be significantly higher than what they were paying for. And it didn't matter what the price was that time and that day. So that's what I mean is reach out, catch some of those knives. It takes a lot of due diligence, preparing, getting the right team in order to understand what the valuation and have a plan in place for catching that knife.
Awesome. Great. Thank you for that explanation. Very good. Very good. Well, we have a tradition here. We are called the Old Dogs REI Network. And so all of our guests get to give us their best old hound dog howl to close us out. So if you are ready, are you ready?
I think so. I think I can do that. I can figure out how to make a howl.
All right. Let's go for it then.
Ow, ow, ow!
All right, that was a good one from a California guy. How many hound dogs do we have around here anyway? But thanks so much, Jake, for being on. Great information. And sorry we ran a little bit over on the original time period here, but had a lot of great data that I think people are going to love.
I appreciate it, Bill. It's been fantastic to spend some time, and really, really appreciate you as well.
Oh, well, thank you. And I also want to thank all our old dogs out there for listening. I know there's a lot of other things you could be doing right now, but the fact that you've taken the time to join us means a lot, and we really appreciate it. Please note everything that Jake talked about today is going to be outlined in detail in our extensive show notes. And the only way you can access those is through the Old Dogs website at olddogsreinetwork.com/blog. And you're going to look for the episode with Jake Harris. Well, that's the show for today. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.